Okay, is the stock market efficient? Great question with a very, very easy answer. No, it is not efficient. So that one's easy. But the question itself, actually, it's one of these questions that kind of gets you thinking about different topics that I've been wanting to discuss, and I have discussed in some of the other videos on this channel. It gets to epistemic humility, for example. It gets to also kind of taking a position that is absolutist versus a position that is relatively true but not always true, and to draw a distinction between those things. So we're going to get into some of that as we talk about market efficiency. So, and then also kind of being precise, right? Precisely what do you mean when you ask, is the stock market efficient? And for example, if by saying the stock market is efficient, you mean that it is always efficient all the time and it's never not efficient, well, that one, I mean, you'd only say that if you were some academic who'd never bought or sold a stock. Any practitioner, anyone who's actually done investing his or herself can dispense with that. You know that the market is sometimes inefficient. So that you can deal with and just dispense with. And what's kind of sad about the academic world is there is a body of thought, actually, modern portfolio theory and the efficient markets hypothesis that is, it's sort of an edifice built on those views and mostly debunked now, right? However, it is true that in general, the stock market is generally efficient, and this is true most of the time. So this is another thing to think about of the difference between something can be true, but it doesn't have to always be true all the time, right? And with stock market efficiency, I mean, I can point right now to some inefficiencies that are happening with GameStop, for example, or with Dillard's, where there are short squeezes going on, and these stocks have put on moves of 100% or 200% in a matter of days because shorts are getting their faces ripped off and they're being forced to buy in at much higher prices. And that's just a dislocation because certain people are mispositioned, and they're mispositioned in a big way. And so when a stock is over-shorted, that's basically an invitation for inefficiencies to happen on the upside. Well, you can also have inefficiencies on the downside during a market crash. And the great financial crisis, you had so many levered players that had to liquidate portfolios at any cost, and you drove many, many stocks to valuations that were inefficiently attractive. And Buffett talks about this, that there are times when you can just be blindfolded and just buy stocks hand over fist anywhere based on the terror and panic of other players who are liquidating. And that's another type of inefficiency that you can take advantage of. So you want to think about these kinds of things. And then, getting to epistemic humility. So sometimes, well, there's the famous quote from Keynes, right? Markets can stay irrational longer than you can stay solvent. So maybe you find some stock or some sector that you think is undervalued, and it just gets more undervalued, and it gets more seemingly irrationally lower and lower valuation, and it doesn't make sense to you. And one of the cardinal sins of a lot of investors is to assume that you're right and the market's wrong. Often the market it knows more because it reflects the perspective of many, many more people than just you yourself. Your perspective as an individual is going to be limited by definition. This, again, it gets to epistemic humility. So you want to respect the market and presume that in general it's going to be right, and most of the time it's efficient, except for certain instances. And when those instances happen, you don't always know about them even except in retrospect. So this is where you stay humble, and there are times when you're more aggressive in buying stocks because maybe there is just a dislocation or a market crash, but you also know that you might be wrong. So this is kind of where the epistemic humility kicks in, and sometimes you realize that the stock market is actually efficient, it just doesn't appear so to you. And that's another thing to always keep in mind. So market efficiency, generally true, not always true, and don't confuse the two. So there you go. I hope these videos, as always, I hope they're helpful, and thank you for watching.